You're welcome back to another amazing video on my YouTube channel. My name is Arab the Plug, and I'm a cryptocurrency expert. I teach how to trade cryptocurrency market, how to trade the forex market, and talk about personal finance. And this is yet another amazing video where I'll be talking about market structure. This is a continuation of our cryptocurrency market course, and if you have not watched the previous videos on this particular playlist, ensure you watch all the important videos that I've put up in the past and the ones that follow this particular one, because it's going to be very amazing. So let's get right into the content of the market structure and what we'll be talking about today. So market structure, I haven't known the concept of candlestick charts, and I haven't understood what a candlestick, what an anatomy of candlestick is, and what each candlestick contains. It is important we talk about market structure, because market structure is what is going to guide you on what to do in the market, and whether you are going to take long trade or whether you are going to take a short trade in the market. So market structure is basically what you are going to use to understand all these concepts. So market structure simply does the following things. It tells you what to do in the market, whether you are going to buy or sell, and it also tells you when to buy or when to sell and other important things like that. So we have different kind of market structure in the cryptocurrency market or the forex market. We have the first market structure we have is uptrend. We have an uptrend. We have a downtrend. We have a downtrend. We have a downtrend market structure. And we have the sideways trend, or what we call the range or sideways trend. So it's either we call it sideways trend or trend. These are the three market structures that we have in the crypto or the forex market. So when you analyze the market, you have to look at your chart first. What particular trend are we in the market? So if it's an uptrend, you start looking for buying opportunities. If you are a downtrend, you look for selling opportunities. And if you are in a range, you as a beginner trader, you don't trade the range. Even though if you are an expert trader, you can trade a range. You can either buy or sell in a range. But as a beginner trader, it's advisable that you don't trade the range of the market, because it can be a little bit technical or tactical, and you might end up losing your money as a beginner trader if you are trading the range of the market. So as a trader, if you have an uptrend simply means you have a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So if you have a market where you have series of higher highs and higher lows, you say you are in an uptrend. And you say you are in a downtrend in a market when you have series of lower highs and lower lows, lower highs and lower lows. So let me just sketch it for you so you can see that. So when you have something like this in the market, you say you are in a downtrend. You are in a downtrend because obviously the market is moving down. But the reason why the market moves this way is that if you look, the market does not just move like this. If the market is going up, it does not just move like that or like this. The market will not move like this. It always moves in the choppy direction. Goes up, it always goes up, come back a little bit, then move again, then come back, then move again, then come back. That is how the market moves. And if the market wants to come down, then the market start doing like this, something like this, come down, move up a little bit, then again, move up a little bit. So that is how the market basically works. So that is why we say that we have different kind of market structure. So let me go back to what I have in an uptrend market structure. Uptrend simply means that the market is moving to the upside. The market is going up. And there is this saying that we say that you have to follow the trend. You have to be a friend of the trend. So as a trader, you have to be a friend of the trend, which means that if the market is trending up, you should find an opportunity to buy. because the market is going up. And if the market is coming down, you find an opportunity to sell because the market is going up. So if the market is an uptrend, you have to look for buying opportunities. And if the market is in a downtrend, you have to look for selling opportunities, which is shorting trade opportunities. And if the market is in the range, as a beginner trader, I would advise that you stay out of the range market until you get to a stage where you can trade the ranging market. So I said that in an uptrend, we have a series of higher highs and higher lows. So let me explain the concept of higher highs and higher lows. So if you look at this sketch that I just put down, this market, this is where the trend starts here. For example, it starts here, then the market moves up a little bit to create a high. Then it comes down again to create a higher low. We call this higher low because when the market comes to this low is higher than the previous low. This is the previous low. This place is where the market started, is a low, right? Market, that particular place is a low, right? Then let me just set this. I'm trying to make this more visible. Cool. So this particular place is a low. This is where the market started, right? Then the market moved up, come down again, but it could not come back to this previous place. That's why we call it a higher low. Then it goes up again to a place that is higher than the previous high. That's why we call it a higher high. So you can just label this one a higher low, higher low, higher low, HL. Yes, and we call this one a higher high, higher high, HH. So this one is another higher low. This place is another higher low. This is another higher high. This particular point is another higher high. The reason why we call it a higher high is because this high is higher than the previous high. This one is higher than the previous high. We call this one higher low because this low is higher than the previous low. This another place is higher than the previous low. So it basically means that when the market goes up, it pulls down a little bit. But because it does not go back to the former place, the former low, we call it a higher low. Then it goes up again, come back, we call another higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. So that is what we call an uptrend. An uptrend is a market, is a situation whereby the market has series of higher highs and higher lows. So now, this market will continue to be in an uptrend. So far it continues making a series of higher highs and higher lows. Until maybe it now happens that this market stops going up and starts coming down. Once it beats this place, this particular point, and starts trending down again, we say there is something we call change of character. We say the market is now in a downtrend. You can see that it's now in a downtrend according to the sketch I have. So if the market is going up, fine, it's an uptrend. But if the uptrend now stops going up and starts trending down and breaks a previous higher high and start going down, we say there is a change of character. It means that the character, which is the higher high, which is the uptrend, has changed to a downtrend. That is what that simply means. So let's go to a downtrend. This downtrend is where the market starts at this point. In a downtrend, the market starts up here, then start going down. The market starts going down. So when the market started going down, it came down here to create a low. Then it came up, create a high. This high is not up to this particular point where the market started. So we'll call this one lower high. We'll call this place a lower high because it is a high, but the high is lower than the previous low. Then when the market comes down again, we can say it created a new lower low. So let me just label it for you. This is a lower high. Let me just label this. This is a lower high. and this particular point is a lower low. This particular point is a lower low. This point again is a lower high, and I'll explain soonest. This point again is a lower low, and that's how it continues. So this place is a lower high because the market calmed down and tried to go up again, but it could not push beyond this point before it started going down again to create a lower low. The lower low means this low is lower than the previous low. So don't confuse this lower high with higher low. Higher low is in an uptrend and lower high is in a downtrend. So higher low means a high that is higher than the previous low, and a lower high means a low that is lower than the previous high. So in an uptrend you have higher highs and higher lows, and in a downtrend you have lower highs and lower lows. So it means that the market comes down, push up again, comes down again, push up a little bit, comes down, push up. So anytime it pushes up and it cannot beat the previous high, then we call it a lower high, a lower low. It created a new lower. So the market is going to continue like this until, let's say, the market stops going down and it starts going up to break this lower high. Once it breaks this lower high and it starts going up again, then you see the market has broken, the market has changed character and has changed the trend. So, and we also call it trend reversals. So trend reversals also happen. That is what an uptrend, this is what an uptrend is. This is what a downtrend is. So now we say the third market structure is a range. So we say a market is in a range when the market is choppy, when it is not moving in a particular direction. You can see when market moves like this, for example. When the market moves like this, we say it is in a range because it is not obviously going up or obviously coming down. It is stuck within a range. So you can just put a line here and a line here too. So the market is stuck between these two lines. So we call it a ranging market, or we call it a sideways trend or a range. So anything you call it is fine. So I hope you have understood the three types of market structures we have. In an uptrend, we have a series of higher highs and higher lows, and the market is trending up until we start reversing and break this previous higher high to create a trend reversal, or to create what we call a change of character. And the downtrend, market is trending down, creating a series of lower highs and lower lows, until maybe it starts reversing and starts creating a new high. And we say we have a sideways trend or a range if the market is choppy, it's not moving in a clear direction, it's neither going up nor coming down. So that is what we call a ranging market. Those are the three market structures we have. And don't forget, like I said, in an uptrend we have we are looking for buying opportunities, because you want to be trading, you want to be a friend of the trend, you want to be trading with the trend, in the direction of the trend. In a downtrend, you want to be selling or looking for selling opportunities, because you want to be trading with the trend. And in a sideways market, you can trade the bounce of the trend. You can trade buy from this place and trade sell from this place if you are an experienced trader. But if you are not an experienced trader, a beginner, you would want to ignore this kind of market when you start trading. So let's go into the real chart and identify this market. So this is ADA USDT. This ADA USDT. You will see that if you look at this market, this market has been an uptrend from this point going up, but at this point we can say it has started a downtrend movement from this point. Even though this particular place is a range, this particular place is a range. Yes, this particular point is a range. But when the range ended, the market started creating lower highs, lower low, lower highs, lower low. This point, it created something here and started coming down. So you can see it's still in a downtrend because of the structure. This particular point from this movement is an uptrend. This place is a range, then it started falling down. So let's look at Ethereum. So Ethereum has been in an uptrend. Yeah, Ethereum has been in an uptrend. You can see the market from this point. It has been in an uptrend. This is a low. Let me just draw what I drew there. This is a low. This is a high. This is a higher low, a higher high. So let me just. So this is a higher low here. This is a higher high, higher low, higher high, higher low, higher high. But at this point, it dropped. But it's still an uptrend because it has not broken down from this place. So it created a new high, higher low, higher high. So it is still in an uptrend, even though at this point it is ranging. At this point it is ranging, but the market is still generally in an uptrend because it's still giving us highs and lows. So that is what an uptrend simply means. So let's see if we are going to find a market that is in a downtrend. This particular market like this, if you zoom the chart, you can see that there are a lot of things happening in this market. From this point till this point is a downtrend because it's giving us lower highs, lower low, lower highs, lower low, lower highs, lower low. Then it ranged around here. This place is a range. You can see it perfectly. And after the range, the market has started going up little by little, even though the uptrend is not clear and not strong. So that is how you identify a market structure. If you have any question, ensure you put it in the comment section. And if you have any topic you would like me to treat on this channel, put it in the comment section. And don't forget to hit the like button and subscribe to my channel, and I'll see you in the next one. So in the next video, I'll be talking about, okay, you have understood the trend. You have understood that in a market, in an uptrend, you want to be buying. In the downside, you want to be selling. When exactly are you going to buy? When exactly are you going to sell? Those are things I'll be talking about in the coming video. So ensure you subscribe to my channel, and I'll see you